Now, for something entirely different, but very important, I'd like to introduce Ian Collins, who's the Head of Research and Development Tax Services in Ernst & Young. And Ian is going to talk about one of the most important incentives that are available to Irish industry for their research and innovation efforts. And I think, Ian, you're going to have some time for questions on this one as well. Okay.
Thanks very much, Dennis. Just before there's a mass exodus in this room, I'm not here to talk about tax. I'm here to talk about cash. Okay. So the main areas that I'm going to talk about are around the current R&D environment, and we've heard a lot about what that looks like at the moment. I'll give a brief overview of the regime, what it looks like. I'll touch briefly on the science test and the accounting test, which are the two key areas of focus that you need to satisfy in order to get money back from Irish revenue. I'll touch on how to prepare for a revenue audit because, as we see later on, this is a real hot topic within Irish revenue. There's an awful lot more companies out there that are knocking on Irish revenue's door asking for big checks, and you've got to expect that there's going to be a similar level of scrutiny from Irish revenue asking for the documentation to support those claims. And finally then, I'm going to spend a few minutes touching on the new guidelines that Irish revenue published last month. So just in terms of the current R&D environment, I think it's fair to say that there have been significant improvements over the last number of years. There have been a number of enhancements to the R&D tax credit scheme over the last 10 years. In fact, ever since the regime was first brought in 2004, there have been enhancements to the regime every single year. So it clearly points to an area that government and Irish revenue want to incentivise. Two key areas of focus that have been improved in terms of the regime itself. The first being the move from what was once a credit system to now a cash refund system. So it does not matter whether you pay corporate tax or not. You can get money back from Irish revenue for doing research and development in the form of cash. Okay, that's the biggest improvement that has been introduced in the last number of years. And the second improvement has been the abolition of the base year. So previously the regime worked off on an incremental basis based on your R&D expend in 2003 and the benefit worked on incremental amounts over and above your 2003 spend. That's now been abolished. These two single areas of enhancement have put Ireland up there in terms of its ability to compete internationally for bringing in R&D investment projects into Ireland. And we'll see later on what that looks like. The intangible asset regime was introduced a number of years ago, and that's to write off the capital spend on acquired intellectual property. And as we know, the minister announced in the last budget his intention to bring in a best-in-class knowledge development box, which is geared towards incentivising patent type of activity. Clearly, there's a number of measures of success. It's clearly been a stimulus in terms of growing R&D spend in Ireland. I mean, over the last 10 years, there's been an extra billion of R&D investment plugged into the state. That's a massive amount of investment in the last 10 years. And there's a number of statistics out there that sort of back that up. In terms of the environment and the who's here, I guess we as a small island have a phenomenal amount of success stories here in Ireland. We've got 9 of the top 10 global pharmaceutical companies here. We've 9 of the top 10 global software companies based in Ireland. We've 10 of the top 10 born on the internet companies here in Ireland. There's a huge spike in the level of medtech companies coming into Ireland. And indeed, there's a number of industrial automation companies based here in Ireland. This is something we need to be really, really proud of. As a small island, we are able to attract the best in class when it comes to bringing those jobs into Ireland. Coupled with that all leads to a number of announcements across the state, and this is only a snapshot of recent activity. So there's been a huge influx of R&D investment plugged into Ireland, and there's only one thing that generates, and that's jobs. And it's generating jobs everywhere. Take, for example, the recent announcement even yesterday with Apple creating a data center in Athenry. That's going to generate a huge amount of jobs as well, and that's just to name a few. So in terms of the scheme itself, I guess it's fair to say that it's one scheme with two options. You can be in the top box here and be profitable and pay Irish corporate tax, and your R&D tax benefit effectively erodes your corporate tax liability, so you get full benefit in year one. Or indeed, you can be in the bottom box here. So you can spend all your money doing R&D, invest heavily in R&D. Doesn't matter if you've got a corporate tax liability or not. Any excess R&D tax credits over and above your corporate tax liability, Irish Revenue will write you a big check for that. That check is effectively refundable over a 3-year period. In terms of the regime itself, this is what it's all about. Okay, so take for example a qualifying R&D project that qualifies from grant aid, and we know that there's a number of grant agencies out there in terms of Enterprise Ireland, IDA, SFI, and a number of them will be speaking today. So if you've got a project that initially costs you 100 with 20% grant aid, your net of grant aid spend is 80. You have your CT or your corporate tax deduction at your normal 12.5% rate, plus your R&D credit at 25% rate. So a project that initially cost you 100 now costs you 50. You can effectively have the cost of doing your R&D in Ireland to the extent that you qualify for grant aid as well as R&D tax credits. Okay, that is the real selling point when companies are trying to sell and entice R&D projects into Ireland, and this regime ranks up there amongst the best in class internationally in terms of Ireland's ability to compete for those R&D investment projects. The final point in this slide is that companies also have the ability to account for the R&D benefit above the line. Now you might say, so what? That's just an accounting anomaly. That's having a couple of drastic effects in terms of both the multinational companies and indeed the SME sector. From a multinational perspective, the ability to account for your R&D benefit above the line enables R&D departments within those businesses to actually get the benefit. That is having a behavioral impact on the ability for companies to claim additional R&D incentives. Because the R&D departments now in larger organizations, they're the ones that can now stick up their love and say, hey, it actually costs us half the amount to do R&D in Ireland, not the full amount. And in the majority of cases within a multinational business, it's more often than not that the Irish subsidiary is competing with its US parent and indeed with its Far Eastern subsidiary as opposed to competing with external parties. So the ability for companies to actually say, hey, it costs us half to do R&D in Ireland means it gives us the opportunity to bring additional R&D investment into the state. And that's having a behavioral impact. I also mentioned, so there's two areas. So that's on the multinational front. On the SME sector, the ability for companies to actually reflect the benefit above the line means you can increase your profit before tax number in your profit and loss account. Again, so what? A lot of the SMEs out there are basically doing business with a view to exit. A lot of the VC funds and the PE houses around town, they effectively value businesses on a profit before tax multiple. So to the extent you're an SME and you can move your R&D tax benefit above the line, increase your profit before tax line, that will mean that you have basically increased the value of your business, and therefore you can increase the value that you get on exit. So you're increasing the amount of cash that you can get and put back into your back pocket. So it's having a number of effects. Essentially, the regime is in addition to your corporate tax deduction of 12.5%. So you have a 25% tax credit plus a 12.5% tax deduction, gives you 37.5% tax relief. You simply claim it in your tax return, so it's just the quantum of your R&D credit that gets submitted to Irish Revenue. The credit first is offset against your corporate tax liability, but it doesn't matter if you don't have a corporate tax liability. That excess is still cash refundable over a 3-year period. And the important point to note is that there's a 12-month deadline. So you have 12 months from the end of your accounting period to submit an R&D claim to Irish Revenue. Otherwise, you'll lose the benefit. That's it in a nutshell. This is going to resonate with a lot of people in this room. This is probably one of the key drawbacks of the Irish scheme. And this is where companies that outsource their R&D to either third-party companies or indeed to universities, the amount that companies can claim in respect to that outsourced activity is significantly restricted. It kind of goes in the face of what we're here today to talk about around collaborating between industry and academia, and it's certainly an area of focus that we are trying to lobby quite hard with the Department of Finance and Irish Revenue to try and improve the scheme. So, there are restrictions on the amounts that companies can claim for R&D benefits in terms of that outsourced activity. I mentioned that there's a science test. So, how do you determine whether you're doing the right stuff from an R&D perspective to qualify for this incentive? Essentially, there's 5 tests. So you have to be systematic, investigative, or experimental in a field of science or technology, being one or more of basic research, applied research, and or experimental development. And I'll come back to that in a second. You also have to seek to achieve and advance in science or technology, and you have to resolve scientific or technological uncertainty. So there needs to be a level of technical risk associated with the project. I've highlighted experimental development here for a couple of reasons, because one, it's where the vast majority of companies that are doing R&D in Ireland are actually claiming for, and it's also an area where companies are completely overlooking. So experimental development is defined as producing new or improving existing materials, products, devices, processes, systems, or services, including incremental improvements there too. Okay? This is how broad the definition of R&D can be. It is not confined to the white-haired scientists playing around with test tubes and labs. It's a much broader regime than that. And this is where an awful lot of companies are missing out on a valuable opportunity to gain cash refunds for their R&D activity. On the accounting side, there's a number of great examples as to the types of expenditure that can qualify. And again, this points to one of the areas of the Irish scheme that is very favourable. It's not just limited to the salary costs of the people that are doing R&D. Okay, so it's a fully loaded regime. So you've got your direct staff costs, you've your raw materials or consumables, your directly attributable overheads, any plant or machinery that you're using as part of your R&D effort, as well as any facility costs that you're using and consuming as part of your R&D activities. So your light, your heat, your rent, your rates, electricity, etc. So you may start off with a pretty small number, but as you bring in all that other support type activity and those support type costs, your number can mushroom pretty quickly. And remember, that mushroomed number, you can get cash back from Irish Revenue for that number. So it's a pretty lucrative incentive regime. I mentioned at the outset that I want to spend just a couple of minutes in terms of prepping for a revenue audit, because it's not going to come as any surprise to anyone in this room that as the level and volume of companies that are claiming for R&D benefits is on the rise, so too is the level of revenue audit scrutiny. There's statistics out there to show that back in 2004, when the regime was first brought in, less than 50 companies were claiming the R&D benefit. In 2014, in excess of 1,400 companies are claiming the R&D benefit. So there's been a huge spike in the level and volume of companies that are claiming R&D tax relief. And that is in no small part down to the fact that it's a cash refundable scheme as well. So there's been a huge increase in the number of claims. There's been a significant increase in the level of queries from Irish Revenue. The R&D tax credit is highly visible. Remember, in the vast majority of cases, you're knocking on Irish Revenue's door saying, can I have a big check, please, for doing my research and development activities? Well, guess what? Expect Irish Revenue to come back knocking on your door and say, well, I want to see the support to back up that claim. Okay? So it's a high-risk area. There's a lot of audits these days that are starting to yield settlements for revenue. And as a result, companies are failing both on the science test, so they're claiming for too much activity, which spans more than what the R&D projects are, and they're also claiming for costs which don't necessarily qualify from an R&D perspective. So you need to understand both the activity that you're claiming for and indeed the costs that are associated with the claim. There are a couple of different style audits that can take place. So the first is the one on the left here, which is a normal financial or tax audit, and that's the bog standard audit where a revenue inspector will come out He or she will tick and bash the numbers, will focus on the accounting test and the various costs that qualify as part of your R&D claim. And generally speaking, then will try to determine what costs should be captured versus what costs shouldn't. A revenue inspector does not have the in-house expertise to say, yes, you're doing R&D, or more importantly, no, you're not doing R&D. Revenue have to outsource that element of an audit to an expert in the field. And typically that expert in the field is a college professor. So it's someone from academia. The process around bringing in an expert is generally the revenue will first approach the business and say, we are proposing to use Professor X from UCD or whoever. Can you confirm that he or she fits the bill? And more importantly, that there's no conflict of interest there. So there's a little bit of due diligence required on behalf of the business to make sure that that technical expert actually fits the bill. Once you go back to revenue and give the thumbs up to say, yep, that individual is fine, there's a non-disclosure agreement signed between the revenue and the technical expert, because obviously that technical expert is coming out and effectively auditing your crown jewels. And then usually the focus of the audit is twofold. So the technical expert will focus on the science test. So are you doing the right stuff from an activity perspective? And the revenue inspector will focus on the accounting test. So it's a dual purpose audit. There are a number of factors that influence revenue selection. I spoke at a conference recently where there was a number of revenue officials in the room, and I stuck this slide up. They didn't object, so I reckon I'm close enough to hitting the nail on the head as to how revenue select their auditing clients. And a lot of this is pretty basic. Obviously, the size of the claim is going to have a big impact as to whether you get selected for a revenue audit or not. Revenue are going to start out at the top and work their way down, and they have been doing that over the last number of years. In our experience, to the extent that you're claiming for cash refunds as opposed to just offsetting your R&D against your corporate tax liability, generally speaking, the more cash refund claims are getting audited as opposed to the credit scheme. What's your track record like with Irish Revenue? Are you a compliant taxpayer? Is there a particular project going on at a district level? So you may have a situation where certain areas within Irish Revenue have decided to focus purely on R&D audits. So there may be a project going on at a district level that they're going to start rolling out additional R&D audits. And there's other areas as well, and in particular your industry sector as well. So what we find is that a lot of the audit activity is actually taking place in the technology or software sector, because there tends to be quite a bit of grey as to what's in versus what's out from an R&D activity perspective. The process for a revenue audit can be lengthy, and it can be cost prohibitive. Okay, and what I would say to you is, if you do get notified of a revenue audit, make sure you put in preparation to place before a revenue comes out and knocks on your door. It's very important that you put the right prep in place before an auditor comes out. Generally speaking, it can take a number of weeks, it can take a number of months, it can take a number of years. It depends how well prepared you are. I've been involved in audits where technical experts have walked out on the day signing off that, yeah, that company does R&D and the audit is wrapped up. I've also been involved in audits where they've spanned multiple years. Okay, so, and a lot of that was down to how companies prepared for the audit in advance of the revenue inspector and the technical expert coming out to perform the audit. So what I would say to you is, make sure you put in place the prep. I want to spend the next minute or so talking around the Irish Revenue's new R&D guidelines. So Irish Revenue published these guidelines last month. I guess it's fair to say that there are a number of positives and there are a few negatives as well. But generally speaking, there's a lot more positives to be gleaned from these guidelines. The positives are around, so they've clarified that it's a fully loaded regime, so employment costs of the individual qualify. And when I mean employment costs, I don't just mean the salary costs of the individuals. I'm talking about your pension, your VHI, your BIKs. So, it's a fully loaded regime when it comes to factoring in employment costs. And there's been additional guidance provided around certain areas of eligible activity within the software sector, which is very much welcome. And indeed, they go on to explain that agile methodologies, which is a common trend within the software industry, is a recognized systematic approach to doing R&D. So that's very much welcome. There's some technical clarifications around the ability to claim for buildings costs. So you can claim R&D benefits on the construction of an R&D building. They've clarified some technical areas around change of ownership situations where a company is acquired by a third party. The base year doesn't necessarily follow with that. They've also introduced the fact that from 2015 and beyond, there isn't going to be a base year anyway, which is obviously a very welcome improvement to the scheme. And in certain situations where you take on short-term consultants, they can now be viewed as de facto employees as opposed to falling within the subcontractor restrictions. So there are a number of positives. And I guess it's fair to say that the guidelines, they read a lot clearer. There's a lot more calculations and a lot more examples that provide greater clarity for industry. There's obviously going to be some areas of focus that Irish Revenue are going to be looking for as well. So they seem to be taking a little bit of a hardline approach when it comes to the treatment of indirect overheads that support your R&D function. There is a theme running through the entire guidance that speaks to record retention on a contemporaneous basis, and the need for companies to make sure that you continuously keep the right level of evidence and records when you're trying to substantiate your claim. It's no good just putting in a claim and not having any documentation to support it. Okay, you need to make sure that you've got the right level of documentation in place to support your claim. Because as we've seen, the likelihood is revenue will ask for it, either on an audit or on an aspect query. And there's some areas around material costs as well that you're consuming as part of both your R&D effort and indeed that you're subsequently selling on from a commercial perspective. You need to net the adjustment or the sales proceeds associated with those material costs. So you need to deduct the sales proceeds off the material costs when you're claiming for R&D tax credits. What does that mean for business? Clearly revenue are going to harden their stance on certain cost categories. Okay, so they're upping their game in terms of both the level of audit activity, the volume of audit activity, and the areas of focus that they're going to focus on as part of that audit activity. I should say that the guidelines are just the guidelines. So they point to areas of focus that revenue are going to look at as part of the audit agenda. There's been no legislative change in this respect, okay? But it does give businesses the opportunity to look at some of the key risk areas or some of the areas that are maybe a little bit grey, and to do a risk assessment in the event that revenue do come knocking on your door. Okay, so there's clearly areas of focus that revenue have highlighted to businesses that they're going to look at in a little bit more scrutiny when they're carrying out these audits. And with that, they're obviously going to apply those guidelines then for future R&D claims. So there may be an onus on you as a business to look at your future R&D claims and potentially adjust the way you're calculating your R&D claims. There's obviously going to be base year implications as well. So there's going to be a number of businesses who have been historically hampered by their high levels of R&D expenditure in 2003. That's obviously going to erode to nil now, and those companies are going to have huge spikes with respect to the level of cash refunds that they can get back from Irish Revenue. That is obviously going to come under additional scrutiny from Irish Revenue in terms of audit activity as well. So there's a number of areas of focus that Revenue are looking for. Just in terms of how we can help, so we have a dedicated team, and we don't just have tax folks, we actually have a team of engineers and a team of scientists that can help businesses assess whether you're doing the right stuff from an R&D perspective. We've a stand over here that has a lot of collateral. By all means, feel free to pop down and speak to us. And we've got a number of thought leadership collateral as well on the stand, and we'd be more than happy to talk to you. We are also in the middle of launching our Entrepreneur of the Year program, and we're taking nominations for that, which expire by the end of next month. And there's a few people from the Entrepreneur of the Year team here today to answer any questions that you may have. So feel free to pop by the stand as well. I've purposely left it a couple of minutes short just to take any questions from the audience. Thank you. Yes. Sorry? It's the service related to a product that's been developed. So your R&D claim has to be within a field of science or technology. So you always have to relate it back to the field of science or technology. Yeah. Yes.
Can I just ask you? Can I just ask you about revenue audit?
Yes.
How many of them fail, or at least incur some extra liability as a result of the audit? And what's the nature? What's the major issues that cause them to fail or to incur the extra liability, please?
So I guess there's revenue. There's a number of statistics out there that say that the level of audit adjustment is on the rise. I think it's about 1 in 5 in our experience have experienced some level of adjustment. And companies are tripping themselves up on a number of different areas. They're tripping themselves up on defining what an R&D project is. So they're claiming for costs incurred before your R&D project starts and after your R&D project ends, when realistically you need to shorten that window. So it's all about actually claiming for activity when you've identified there's an area of uncertainty or risk, and when you've actually resolved that uncertainty or risk. So it's making sure that you're claiming for activity within that uncertainty box and not outside those key areas. They're also failing in terms of being inadequately prepared on audit. And that's the biggest area that I see companies trip themselves up on, is not having the required preparation in place when it comes to audit activity. And also, some companies are actually taking too narrow a focus. So their view is that R&D is around, playing around with test tubes and labs, and by white-haired scientists. When actually what we've seen is the types of activity that can qualify are around process improvement and innovation on your product. So experimental development type of activities can qualify. So having too narrow a focus is generally another area where companies are missing out on the opportunity to claim valuable cash refunds. Okay. Yes. Sorry. Last question. Yeah.
I work in education, and just from what you're saying, if we have a scenario where we would have final year students with a very good project that they would like to take on to commercialize,
yeah.
And the advice maybe that they've given is to set up a web domain, set up a limited company, and then work on it. Is there a scenario where they could be entitled to get some cash back for that initial output? Because it was mentioned earlier that, it's always facing that they have to find the money to start it up.
Yeah.
So if they were now encouraged to say, well, look, maybe initially it's going to cost you 500, but you're entitled to 400. Does that scenario exist?
Absolutely. So long as you're a trading company, you can benefit from this. Doesn't matter whether you're small, medium, or large. So long as you're a trading company in Ireland, you can benefit from this cash refund scheme. Yeah. Okay. Thanks very much. Who's next?